Hello and welcome to Crux Investor. We caught up with Wayne Heili earlier today of Peninsula Energy. They've been buying pounds of uranium in the marketplace. We were interested in what he learned through that exercise, and what he tells us was pretty fascinating. We also talked to him about the imminent test results and when they're due to come out and what potentially we should be looking for. If you want our thoughts on that conversation, topics discussed, you can find that at cruxinvestor.com. And we'd love your feedback too, so give us a like, leave your comments below. We'll get back to everyone. And if you want to see precisely what we talked about today with Wayne, take a look in the description below. Wayne, how are you, sir?
Great, Matt. It's nice to be joining you on the program again today.
Yeah, thanks very much. There's a lot going on at the moment, and I wouldn't mind your thoughts. Our man in America, you're going to give us an insight on what's going on over there with Mr. Biden, etc. But before we do, I better start with some pleasantries. Are you well? How's your weekend? Did you have a long weekend like us?
We had our Memorial Day weekend. I got a chance to go out and enjoy the weekend at the local lake and spend some time with my family. So nice and relaxed. It's early morning on the day after a holiday. You get me either sharp or, still working on getting back.
I'll reserve judgment until the end on that one. We'll see how we go. But look, we're here to talk about Peninsula Energy, obviously, but you're also going to help us with what's going on in the market a little bit, and also potentially a little bit about US economics too. So let's kick off, given that 1 minute overview of your business for people new to the story, and we'll pick it up with all those topics in a second.
Right. Well, Peninsula Energy has the Lance project in the United States. We are an ASX listed company, so you'll find our stock as PEN on the ASX. We also have OTC QB trading. The symbol is PENMF. So if you're a US investor and you're interested in trading in Peninsula, you can do that. The Lance project in Wyoming is currently idle, but we are running field demonstrations on low pH in-situ recovery chemistry. Those tests are going well, but they are long timeline tests, and we ask for investors to understand that test in the field demonstration, like we have, is a long time frame test. Results will be coming. Probably the next results will be issued with the June quarterly report. Other than that, we've been actively engaged in the uranium market. We recently announced that we were raising some money to purchase uranium. So we have about 300,000 pounds now coming to us for working inventory. What's special about Peninsula is that we have long-term contracts as a junior uranium mining company, and our long-term contracts extend out to the year 2030. We've been preparing to make some significant deliveries this year. We have about 450,000 pounds of deliveries in the, late in the first half and into the second half of this year. And one of the things that we realized is that having a working inventory, a stock to draw from, is going to help us manage our affairs, our trading affairs and our sales affairs with the customers. We have been in the market in the past. We signed quite a few purchase agreements to supply into our sales agreements, but those were not for inventory purposes. We didn't keep pounds in inventory. We'd take delivery and move them right to the customer. What's changed is we've picked up a little material for inventory. I think that's going to give us flexibility in bidding into additional contracts. It gives us the opportunity to not worry about hedging when we're bidding into contracts, because we have a known price on material in our inventory. It's also going to support the development and the restart of Lance. The money that we raise today can be converted to, it's being put into uranium inventory now, but it can be converted to cash when we need it for the restart of the project.
Okay, there's a lot to unpack there, actually. Let me break it down, because one of the reasons I actually called you was you put a press release out there about raising $15 million to go and buy uranium, right? You're going to purchase uranium in the marketplace. You outlined there, the rationale for that. Last time we spoke, you weren't so sure. So why the switcheroo in thinking?
Well, you're right. Last time we spoke, other uranium companies were out in the market buying inventories for the purpose of investment speculation. And, while I looked at that then, I said, well, that's their business if they want to take that chance. What's changed really for me is the coming of Sprott as a management for the UPC. I see UPC changing from a rather staid buy and hold fund of uranium to a much more dynamic and active buyer of uranium. I think UPC's stated objective under the Sprott management is that they're going to restructure their fund. They're going to list in the United States, and they're going to tap into the U.S. investment base. Previously, all the capital raises were done in Canada, and the UPC investors were largely the Canadians and the U.S. investors who were willing to put money into Canadian shares. When they move to the United States, they're going to tap a much larger market. They're going to have access to a lot more cash, and they're likely going to be buying a lot more uranium. So it seemed very apparent that this is a good time to get into the market, to get in front of that, and to acquire some uranium for inventory purposes, and for us it was for managing our sales contracts.
So your rationale is slightly different from the UECs and the Denisons in that sense. Is that what you're saying?
Yeah, it is. Look, we didn't go out and buy 1 million or 2 million pounds. We bought 300,000 pounds because the need for us was to have some additional material. We did have open origin deliveries in our contracts that we hadn't yet matched up with purchases. So some of this material can go to satisfying our sales contracts. Now we have it in inventory. But if we were just speculating on the price of uranium, we probably would have gone for a much larger raise and purchased much more material. So
what did you learn when you were out there?
The uranium market is tight. That's one of the most insightful questions you're going to ask today, I think, Matt. We had a hard time finding material for near-term deliveries. We did go out and look for material from producers. We looked for material from traders, and what we found was, people were saying, we can deliver material to you in September. We can deliver, material to you later in the year. And this is May. This is May when we were shopping, and we weren't shopping for huge volumes. And all we were finding was we don't have material for near term. I mean, there is some material for near term, don't get me wrong, and it's largely in the hands of the traders. What I found is that producers have committed their pounds out further into time, and that's good. I think that producers sell to traders when they have no other customers, when the utilities aren't buying. Traders obtain material and they have to turn it. That's their role in the market, and it's okay. But right now, finding supply in the near term is very difficult, and that supports the theory that the market is tight, that the amount of material available is getting less and less for trades.
Okay, so it's not that producers don't have any; they've just got it committed. Understood.
Yes. Yeah, I think it's really clear. It's not fair to say producers don't have any inventory. Large producers carry strategic inventory, and even Peninsula now wants to, is getting into that aspect to carry a strategic level of inventory. I think you'll hear Kazatomprom say we need 3/4 of a year to a year of inventory. Well, they may be at that level, which means they're not willing to sell material out of that inventory for short-term opportunities at this price. They're selling further out into time, committing, the next production, not their current inventory.
Cool. And just to help people understand the buying process. Okay, so you've got traders, and they trade on the arbitrage where they buy and sell it, obviously. So do they basically forward purchase? And what does that mean for them? Are they having to stump up cash, or do they just option the purchase going forward? So are they tying up a significant part of the market in terms of?
Quite a few of the traders have relationships with producers, like BHP, who, Olympic Dam. their material has to go somewhere, and they don't generally sell into long-term contracts. They're closer to a spot seller, but their spot selling is spot price selling to traders. They have relationships with traders who take the material from them so that they're always cash flowing. And then those traders have to place it into the market. So the traders have a flow of new material coming to them from certain producers all the time. And those traders will use that material in carry trade transactions, spot market transactions, and other nearer term transactions, because they can't put money into it for the long term unless they know that they're getting a good rate of return on the out.
Yeah, for sure. And if I look at your deal, if I look at Denison, it said it took them lots of different transactions to actually make up the pounds which they wanted to go out to market for. Then you look at Boss, that was just 2 deals to get what they wanted because they had connections and so forth. For you, so a lot less pounds. Was that one transaction or multiple? How easy?
We did end up doing it with one transaction. Okay. Yes. Yeah. If we were looking for a greater volume, we most likely would have resorted to multiple transactions.
Right. Okay. So, and if I look at the marketplace, we've got a weekly uranium show. We talk about this a lot, which is how the cycles of the uranium buying. Typically, you look towards the end of the year, Q4, after the WNA, after I'm not quite sure where it is this year. Is it Miami this year? Where are we looking?
Well, the NEI has not determined a location.
Got it.
Other than to say generally Florida seems to be the target.
Got it. Okay. So, but usually once the utility buyers have kind of got together, had a little chat around in the corridors, there's usually a sort of flurry or a little bit more earnest to their buying Q4. Is it going to be that long, or do you think the UPC Sprott get together is going to change the market dynamic?
I'm seeing some new entrants into the marketplace now. Some utilities that we haven't seen in a while are coming into the market and looking at buying some material. I think that, you're right. The WNA is typically in early September, and that kicks off a buying season, or an expectation that we have a buying season. For me, I see June, July, August as active months this year. We haven't had a lot of activity in the market, and the utilities have taken note of the Sprott entrance and the notion that Sprott is going to come in and pull more material from the market that's already thin. So I think with the utilities taking notice, some of them are getting out front. There's definitely utilities that have been out on the front foot on this, and I think more and more utilities are going to be coming in. So for me, the wait is nearly over. I think the utilities are coming into the market now, and I think we're going to have a more active U.S. summertime than we have seen in a long, long time. The buying season is going to start sooner and not wait for WNA and the fall conferences.
I'm just trying to think, if I look at UPC, if I look at Yellow Cake, they've been around for a while. People understand what they do. But they haven't been very active or very aggressive in the marketplace. So do you think this move by Sprott changes the sort of dynamism in the marketplace? The marketing firepower, let alone the buying firepower and the financial capability of structuring transactions to allow them to mop up, soak up spare inventory in the marketplace and get people interested. Are you seeing that?
I think that Sprott's made it very clear that they're going to be a price support mechanism in the marketplace. Really, they want the fund to succeed under their management. Under previous management, UPC has been at times the fund implied price of uranium is significantly different than the actual price. And what that means is that their net assets are valued either higher or lower than their shares. And when their net assets, the value of the uranium is higher, they generally have a green light to go out and raise some more money. But when it's lower, when the fund implied price, if you will, is lower, that means they're going to sit quietly, and they've sat quietly and tried to wait for that spread to correct, where Sprott has indicated that they'll be actively managing to keep that spread very narrow. That means that Sprott will buy more frequently. They'll use their abilities to raise money and the interest that the uranium market has now to acquire a lot more uranium.
You're talking about a 15 million equity raise. Given the use of proceeds, why is it not 5? Why is it not 25? Why is it 15?
15 bought us the level of inventory that we needed to manage our contracts better. It's 300,000 pounds. 15 million Australian dollars bought us that. We are adding a share purchase plan. It was 13 million plus 2 for the share purchase plan. That's going to give our retail investors, our supporters, the opportunity to pick up shares at the same price that we offered them to the institutions. But all in all, this was a modest purchase. This was a modest cash raise. It wasn't an aggressive one. It had a purpose, and that purpose was to add an asset to our book, to add a working inventory into our books.
I get that, but I'm just having seen what others have done, and the market is open to this suggestion. You weren't tempted to do more.
Yeah, and I think last time we talked, I said let the physical funds do the buying and holding of uranium. That's what Yellow Cake is for. That's what UPC is for. And that's not our business model. Our business model is to be a uranium producer to advance the Lance project to production, and I believe that having a working inventory, which can be converted to cash as we transition the Lance project to production, is a very, very valuable asset. We'll be making that decision to do that in a rising market. And we assume that we'll be able to turn those pounds back into the market at a higher price than we paid for them.
Yeah, I hope so. And talking of Lance project, in the middle of some test work, are things proceeding as expected? Because you put out, I've seen a couple of releases which are just kind of, I guess, holding releases. But what's the timing on actually starting more?
Yeah. Actually, we made some changes, and we described those changes in our to the test configurations, the pattern configurations. We described those in our last press release. For us, those changes to the pattern configuration have taken effect, and we're starting to see some positive developments in the test. I think I think you'll see the next press release on that, consistent with the amount of time that it takes in this test. A month or more of time is needed to see significant advancements or changes, or the effect of these patterns changes. So I'll look for the next announcement with the end of the quarter, unless something unusually good or unusually bad happens in the test in the interim. I think investors can understand that the test is running according to expectations if we don't have a release, and that we will have additional information on a regular basis.
I want to talk about the US. You are a US located project, obviously, Wyoming. Mr. Biden has been splashing the cash. We're talking about we're talking about a $6 trillion program at the weekend, or at the end of last week. Some of that's going to nuclear, about 14 billion. Is that about right? 14
billion, somewhere in there. Yeah. It's so what we've seen in the US last Friday, right before the holiday weekend, President Biden introduced his budget proposal. And that's the first step of the budget process. The president outlines his hopes and expectations for the U.S. budget, and inside of that, he put a considerable amount of money into advanced nuclear and to preserving existing nuclear, and we're very excited about that. There was, between advanced nuclear and preserving existing nuclear, he was proposing about $14 billion for the next fiscal year. That's a big investment that was lacking in previous budgets. The process, Matt, is that Congress then, takes the president's budget proposals and reshapes them to Congress's liking. In the United States, the Congress makes the budget. The president proposes and Congress disposes. So we have that. The president's budget is important because it guides his his expectations are on what he would approve. But thousands and thousands of changes will happen. And why do I say that? Because, some of the tuned-in investors will notice that lacking from the president's budget was continued funding of the U.S. Strategic Uranium Reserve. That doesn't mean that it's dead. It means that, Congress, where we had bipartisan support for that reserve last year, will have the opportunity to introduce it, to put it into the budget, and to fund it at the level that they see appropriate. So while the president didn't have it in his spending, that doesn't mean that it won't survive the budget process. The budget process is a lengthy one with a lot of opinions being introduced along the way.
Yeah, I think it's really interesting, and I'm trying to understand it. So 14 billion sounds like a lot. It's probably not a lot, because that could be, you talk about the cost of actually either building new facilities or updating or extending the life of some of these nuclear reactors. It's not a lot of money in reality, is it? It's directed in the right place. For us, it's really important that the U.S. nuclear utilities that have existing plants keep those plants alive and running, keep them competitive. And the funding is really tax credits for nuclear electricity generation. So our main customers are getting a lifeline. That really translates into a lifeline for us. It's opportunity for us in the future to continue to have a large-scale customer base in the United States. Couldn't be more important, and that funding will very positively reflect on the fuels industry, the nuclear fuel industry along the way. So development of small modular reactors and advanced nuclear reactors, which are deployable in remote locations, is getting attention on the forefront of the budget. Survival and maintenance of the existing nuclear fleet is getting attention in the budget. And those are very good developments for the nuclear energy sector. Okay, so utilities will end up with tax credits to the tune of 14 billion predominantly. We'll have to see where it ends up. Right. Okay. Right. But as you say, the no uranium reserve number, it was originally 150 bipartisan, we're down to 75, and it now doesn't make an appearance in the president's budget. But you're saying it hasn't gone away. It's just part of the negotiation of these things. So who was pushing it really? Who was pushing it really? Thank you for recounting that. You remember that last year the budget process was a long one. We got at that time President Trump's proposal was for $150 million, and ultimately the budget compromise ended up at $75 million. This year, the president's budget has zero, and Congress is supportive of maintaining that reserve. The Department of Energy has committed to standing up and utilizing the funds that they were given for this year. So the reserve will get stood up with that $75 million. That $75 million is yet to be deployed. And it doesn't make sense to just start a program and kill it. I think our advocates in Congress and in the Senate will fight, and there's bipartisan support, so the fight isn't so hard to reintroduce that funding into the budget. Just like last year, the process was long and everybody hung on to every bit of news. This year, the process starts out with a zero, and we'll see where the compromise is. Well, I just thought it was interesting. And I needed to understand it because it started with a Republican president saying 150, bipartisan got it to 75, and then you got a Democratic president going zero. So there's a sort of little journey there. But you're saying just part of the fun and fancy of the negotiations, sit back and let's see what happens. Yeah, and it doesn't matter to you guys, does it? Anyway, it doesn't matter to you.
In the famous words of Monty Python, it's not dead yet. It's we got a lot of time, and it's a process. It's a journey. It's not a conclusion at this point. It's just the first budget proposal.
But as I say, it doesn't matter to you directly. You're getting on with the business of running your business. It's a nice to have. Is that how you're positioning it?
It's a nice to have. Yeah. There were no guarantees. We have always said that, we would be eligible to participate in supplying material to the Strategic Uranium Reserve, and that would be an opportunity that we would like. But, you could tell already by the conversation we've had, my focus is on supplying utilities more so. And the U.S. government was an opportunity that I expect will still be there. But if it's not, that's not the end of the world.
So the big message you're leaving people with is there's not a lot of free uranium, not free, available uranium to buy at the moment. It's really tight.
That is correct. The market is tight. We were in the market looking for material. We had offers for material that would, deliver out in September and later. We ultimately found some material for a June delivery, but it was based on limited quantities, and it was a quick turnaround type of deal. So the uranium market is indeed tight on supply. I think producers are sitting on their target level of inventory or less, and producers are disciplined. The producers are selling further into the future. Only material projected coming from production is getting released into future transactions, but I don't think producers are a significant part of the prompt delivery spot market. Traders have material. They always will. And there'll always be some material allocated to prompt deliveries, but that amount right now is very, very thin. It was hard to find material this go around.
Okay, Wayne, I appreciate your insight as always. Always intelligent commentary there. I am looking forward to seeing when these results come through, how you've been progressing there, and then the so what component, what happens next, what's your timings and so forth. That's probably for another day.
That's right. Well, I'm looking forward to joining you again in the near future, maybe a month or two down the road, where the market's developed. We'll see what Sprott's up to. We'll see what the U.S. government actually comes back with, and we'll see how the field demonstration is advancing. I think we'll have a lot to talk about again in the not too distant future.
Brilliant. Thanks, Wayne. Appreciate it.
Thanks, Matt.